Hey everyone, and in this video we are going to now go about a little more deeper into the market and talk about the basic concepts in the markets. Before moving into it, I want to thank FT UK for sponsoring this course and making it accessible to everyone. Now let's get into the lesson. So the first thing that every trader needs to understand is price chart. This is literally where everything happens. This is the most important thing you ever need. And we are going to be using TradingView for charting. The link will be in the description if you want to go there. And I will start right with. So TradingView has this toolbar on the left side here, and you can draw lines from here. You can see these different kind of rulers and emojis and text and brushes. You can just draw things here for your analysis. Then we have time frames here. If you look into it, this is 3M, 5M, 1H, D, W, the candles there. So right now, as you can see, it's on 1H, which means every candle that you see here it represents 1 hour of price action. So if price went from here to here, this means that if one candle is showing price from here to here, this means that price went up from here to here in 1 hour. And then we have the ticker. Ticker is basically the name of the asset, which is Bitcoin Tether US. Right here, it shows the time frame here and the exchange here. So right now, I'm viewing Binance BTC USDT 1 hour chart here. And these are candles, and on the right side, you can see different price values, which represents where the market is. Currently, this is the current price line, and at this point, it's at $105,000, around something like that. Yeah, so this was about TradingView. This is important because we're going to do all our analysis here, and you can't really succeed without using TradingView, to be honest, in trading, because it is the best platform to view charts. Let's go into understanding the candles. We have two kind of candles, a bullish candle and a bearish candle. A bullish candle is the one which opens, makes a low, then go higher and closes above the opening price, and vice versa for bearish candle. Now, this might be a lot to consume, but let me just make it simple. Let's assume the price of Solana at the opening of the week, which is Monday, was, let's say, $150. So $150 is our opening price of the weekly candle. And let's say price is just moving lower, and on Wednesday it goes to 135. Okay, and then from there it goes to 180, and then when it's the time of the close at the end of Sunday, the price is $170. So see what's happening. Price opens at 150, makes the low of the week at 135, makes the high of the candle up, did I say 180, 180 or whatever, and then while closing the price was 170. And this is for every single candle. It can be the 1 minute chart, the 5 minute chart, the monthly chart, the yearly, or whatever. This is how we read candle. So if the closing price is higher than the opening price, that's a bullish candle. And if the opening price is higher than the closing price, which in this case is opening price is higher, closing price is lower, it's a bearish candle. This is how we read candle, and it is important for you to understand, or you won't be able to read charts. The next concept that we have, which is also very important, is orders. Order is basically instructions that you give to a broker or a trading platform to sell or buy a financial asset, right? So let's say you want to buy USD at a certain point. What you are going to do is that you are going to give instructions to your broker to buy or sell whatever you want to do with it, buy or sell that for you at a specific price point. That is basically an order. Now, there are different types of order which you can place in the markets where you are broker. Now, every broker has limitations. Some will offer more order types than others, but I'm going to go over the important ones and the ones that I use the most. So the first one is market order. Market order is the type of order that executes right away. Let's say if the price of Bitcoin is at $50,000 right now and you want to buy, if you press the market order buy, you are going to buy the Bitcoin at $50,000. If you sell, it's going to immediately sell whatever the price is at the time. Then we have a limit order, and a limit order is used to sell or buy at a specific time, which the market hasn't reached yet. So for example, if you want to buy something at a price of $20, but the current price is $40, what you can do is that you can place a limit order at $20 price point. And what is going to happen is that when market comes at $20 price, it's going to automatically execute your order and you will get into a position. Okay, this is important because let's say you have your analysis, and you're according to your analysis, something is going to go down 50% before going up 100%. So you can't just buy right away. What you are going to do is that you will place a limit order below 50% at the 50% down area, and then that's going to give you an optimal entry rather than buying at the current price, right? Then we have stop loss order and take profit order. I'm going to first go over these two and then the trailing stop order. So a stop order is actually a type of order that prevents you from losing more money. So let's say you have your analysis, you buy an asset at $10 and you think it's going to $20, but you also have a condition, and the condition is that if it touches $5, then that means that it's not going to go to $20. So this means you have an invalidation of your analysis or your idea. So what traders do is that they will put a stop loss order at $5 price value. And if price hits the $5 price, your trade is going to close without you losing more money if it goes even lower. So stop loss is the most important order. You can't really be a good trader without using it. If you are not using this, you are basically just a gambler. Then we have a take profit order. This is a type of order, take profit order, which helps you secure your profit. So let's take that previous example again. You made your analysis about an asset that it's going to go to $20. So what you will do is that you will place your take profit order at $20 and your trade will automatically close at the $20 price area, right? So why is this important? Because let's say price went to $20 and then it came back down to $5 and you didn't put a take profit order. You wouldn't have won anything in the market. You would have made $0 from it. Then we have a trailing stop order, and this is a kind of dynamic, it is a dynamic stop loss order. So a usual stop loss, we place it at around, let's say, as per our analysis, at $5. What we can do with trailing stop order is that, let's say we got into the market at $10 price area and it went to $15. Now you want to make your trade less risky, or you just want to completely make it risk free. So what you are going to do is that you will put a trailing stop order that will protect your trade, and as soon as it hits your entry price, your stop loss is going to be triggered. So what's going to happen here is that instead of making losses, you won't win anything or you won't lose anything. You can also put this trailing stop order at a $12 price range, and due to that you will secure something out of the market, right? So these are the orders and they are extremely important to understand, and if it feels like a lot, don't worry, you will understand it with time. Now here is a bit deeper question in the market, and that's, what is the reason why the market moves? Like, why is Bitcoin going up, or why is your USD going up, or why is dollar going lower, or whatever asset is doing whatever kind of movement? Why is it doing it? Is there a specific reason behind it? And yes, there is. The reason is supply and demand. So I'm going to give you real life examples and explain it in real life terminologies. Supply is basically your stock, whatever amount you have of something, whatever availability you have of something. Let's say we take an example of chairs. You have 10 chairs. So what is the supply of your chairs? You have, the supply is 10. And then we have demand. Demand is basically how much someone or people wants or need to buy the asset that you have. So if there is 15 people and you have 10 chairs and all of these 15 people wants those chairs, what happens here? The demand is higher than the supply. So in this case, what you have to do is that you have to increase your prices of the chairs to meet the demand. So when you increase the prices, not all of the 15 people would be able to afford the chair. So prices is gonna go up, right? But let's say if you have 10 chairs, you wanna sell them out, but there are only 5 buyers, the demand is only 5. What are you gonna do in this case? So you want to sell them, but there is no one to buy. I mean, there are less people to buy. What you will do is that you will reduce the prices so that more people buy it, right? This is how supply and demand works. So basically, more supply is equal to more supply and less demand equal to lower prices, and more demand and less supply is equal to higher prices. This is the same for Euro USD, this is the same for Bitcoin, this is the same for every single asset. The markets work this way. Another example I'm going to give this time in technical terms. You might have seen that a certain type of news, we had an Iran versus Israel war right now. What happened to oil prices after the war started? They went up. Why did they went up? They went up because Iran supplies oil to the entire world, and there was a threat that Iran might block the supply of oil to everyone. So the supply was getting declined, right? People were in fear that the supply is going to go lower. So what happened? Oil prices went up, right? This is the most easiest example. Here's a real life example. Let's say you have 10 houses and 20 people wants it. So high demand and less supply, right? High demand and less supply. And then we have another case where the houses are more, but the demand is less. So what's going to happen? In this case, price is going to go higher. And in this case, prices are going to go lower. So I hope this is clear. By the way, if you have any questions, you can just always comment down below, join my Telegram, or just DM me on Twitter or mention me on Twitter. It's all in the description.